Hi there, 𝘄𝗲𝗽, Lauren Hall here from Loan Market Edge, coming to you with our weekly wrap. What's trending in lending this week from the good news brokers? Okay, we're going to come up with like a couple of slogans there.
Yeah.
Interesting point first, just off the cuff. Fact actually learned this week. Do you know that you actually don't need a parachute to go skydiving? Do you know that?
No.
Serious?
No.
It's only if you want to go twice that you should take one.
Very good. Very good.
That was the best I could come up with, short notice. Now let's talk about what's trending in lending this week. Refinance, cashbacks, what do we call them? Cashbacks, incentives,
points,
bonus points. There's like 1,000 different.
Free money.
Yes, correct. But is it what it's cracked up to be? We will Mythbusters. Here we are. So
it's a new hashtag for this week.
It's a new hashtags, Mythbusters, Loanbusters. So interesting with that, I guess traditionally it's been sort of about looking to refinance a home loan, and that lender will effectively do some type of incentive, whether that's a refinance rebate, a cashback offer. They will offer generally $2,000, $3,000. Now it's very specific, depending if it's a certain loan amount, depending on a certain LVR, depending on the day of the week. Like there's all these things that you need to qualify to get into that. Now, doesn't necessarily always mean best interest rate. Yeah, but and probably during the last couple of years with COVID and all these things that happened, it became very attractive and a very easy carrot to just dangle because people were just moving around for any reason, and this was for some banks trying to get some market share back. We've seen this week a real push from probably 3 or 4 in particular come back out. They've extended for like the 7th time, but extended these again. It's a magic offer. It's a closing down sale. We've been closing down for 2 years.
Limited time.
Limited time only. And so in this, they've come back, big push around the 2,000, the 3,000, the cashback offers, the Qantas points. Let you talk a little bit about that one.
That's a new one.
Since it was all over your socials.
It was.
Tell the people.
They'll already know about this. This won't
correct.
be news
Clearly
to them.
they're following. Yes.
So, just in time, obviously, for all the borders in the world opening up. A very snazzy 300,000 Qantas points on offer for new home loan or refinancing. So, obviously, that's a nice little sweetener on top. That's not necessarily why we're going to go there, but if we combine that with a great interest rate, and obviously you meet policy and tick all the boxes, that's a nice little incentive on top. So, I think it's a trip for 4 to Hawaii return, or
I'll just take myself kids. 4 times.
I was going to say first class to New York.
Yeah, look, it's an attractive offer for some people, but it doesn't work for a lot. And at the same time, is the juice worth the squeeze? Is it bang for buck? You get these points, but if you're paying, at the 2 or 3 year mark, your interest rate ends up being higher than what it would have been. It's sort of all it's a real balance for us. Like we sit down with clients and you go, okay, well, great, we can get you that $2,000 or $3,000, but you're probably going to pay 0.5% more in interest than another offer, right? And on a loan amount of maybe 250,000, it can be really attractive, and it might take 3 or 4 years you're ahead. But on a loan of $500,000 or $1 million, very quickly that 0.5% is a lot more value than those points or that $2,000 cash back. So definitely reach out. There's a huge push on that, but reach out to us as you would, and we can sort of help balance that out and work through it and go. Like Lauren said, if there's a combination of those that where it makes sense, that's great, but it's not always what it seems, and it's not always applicable for every type of client as well. And we thought, obviously, as we know, continue to be hot off the press. You always hear it here first, but we thought we'd give some examples around some of the interest rate changes, and also the conversations we're having with clients a lot, and it's more based around what does this mean for you. And similar to just what we talked about, the cashback, it's very specific. It's very customized to what this means for you. You go to a barbecue, everyone's got a story, that's great. Eddie the expert, hopefully you're telling them how good we are, because we have the best barbecue story, that is the goal. But I digress. But for these numbers, we thought, well, what does this actually mean for you? We want to try and
Yeah.
give some live examples to maybe balance that out a little bit.
What does it mean for your budget and your household expenses?
Now, we've seen already 0.75 over the last 2 increases. And again, a lot of clients in the last, for a lot of people, the last 5 to 10 years, we haven't been in a rising market. We've been in a market where rates have just continued to drop. So on the way back up, we just need to change the way we think. Knowing that this is coming, and it's part of the way a market over a long period of time works. There's going to be ups and downs. We can't just always go down. So as we do start that increase back up with the budget, and what does this mean for you? You've got to start thinking about those numbers. So we had a look, if you'd been on a rate, and just using a rate today of 3%, we've already had 0.75, so we already know what that increase looks like. But let's say there's one more increase of 0.25 by the end of the year. We're probably suggesting there might be a little bit more than that, but let's say if that happens, obviously you heard it here first. This will be date and time stamped. But if you go from a 3% on a $500,000 loan, let's say that weekly repayment's $486. That's your weekly repayment.
Just guess that, did you?
Just guess that, Rain Man.
Not specific.
Rain Man. Hopefully you didn't see my eyes look down at the paper. But if you went from 3% to 4%, and again, you're already 3/4 of the way there, that repayment at 4% would then be $550 per week, which is $65, $70 a week already. That's, with just a smidgen off, nearly that $75 a week coming into your budget in that example, So when we talk about those cashback offers, some of the benefits we've had for our client, when trying to balance this out, potentially the rate becomes more important on a loan that size than the carrot that they dangle in relation to those points. So the benefit we've had for a lot of our clients, and because rates have been so low for so long, anyone that's been around, 2 point something, 3 point something, we've never been there, so it's incredibly cheap and it feels good, and we don't really need to do too much because money's cheap. But as we now start to rise back up, it's going to be really important where suddenly that 0.5%, we could get you that back. We're finding with a whole lot of clients, especially in probably the last couple of weeks, when these rates have started to move, a lot of the conversations we're having with clients about refinancing, we can get that 0.5, we can get that 0.75 back still with a lot of banks. There's only a specific group of banks with specific tiers of pricing. We talk about that a lot. So, owner occupied, principal and interest borrowing more than 250 and below 80%. As an example, that tier, if you were a 5% home buyer, let's say, and took a 95% loan out initially, and in the current market, if you took that loan out 2 years ago, 2.5 years ago, you probably, from an equity point of view, you've gone from 95, you by default, even if you paid minimum, you might be at 90, or, a lot of areas you're probably going to be at 80. So suddenly you go from, in a current market of 4.1, let's say, comparable would be 2.5%. That's literally the difference between a bank A and a bank B for a client based upon a tiered set of pricing. Now, again, the dangle the carrot, there's points to this, there's points to, that's not where we start. We start
and it's compound. So I've got to cut you off because you're well on a roll. You're off there. You're doing good.
Gone.
It was gone. That's also compounded for investors as well. Okay, so you think if you've got your home loan, you've got an investment property or a couple of investment properties, that 0.5 is compounded across that. And most of the times we find investors probably review their loans less, than just your normal owner-occupied buyer. So in the majority of cases, there is always room to move on investment loans. There's always some room there because it's not reviewed as regularly. So when you compound a discount like that on your own home plus maybe an investment property, that's when you'll really start to see that money saving in your budget and in your expenses.
That 1.5% is literally that's available today for clients. From just knowing what bank, what day for the right client. So those conversations we're having a lot more now. We're sort of concerned for a lot of clients where their concerns are around that, or what that's going to look like, 0.25%, 0.5%. We're already 0.75 in. Another quarter, another half comes in, or 1.5 over. For a lot of our clients, we've actually shifted them back to the bottom of that market. So these increases, they're starting from a 2%, 2.5, they're starting from a low base, 2.8, starting from a low base and starting to make their way up.
And there's still plenty of negotiation in that. So what you're seeing advertised, on TV or wherever, or what the bank's saying, hey, this is what we can give you. And in a lot of cases, there is room to move on that, and they will negotiate and they're still very competitive with other banks. So we don't want to accept just the first
standard
offer.
rate, yeah.
For us, obviously, we know 65 lenders. We know how to leverage who will compete with who, to make sure that we are absolutely getting that best deal.
Yeah, so it isn't just rate driven, but right now rates are really important. So call to action. If you haven't already, give us a call. Love to chat. Happy to help. And we look forward to talking to you soon.
Bye.
Bye for now.